Welcome back. The crypto market is staging a recovery. This after being caught up in a global market sell-off, which saw Bitcoin tumble below $50,000 for the first time since February. The world's biggest cryptocurrency has since recovered. However, those recession risks still remain. Joining me now to discuss the movements we've seen play out in the market is co-founder and CEO at valar.com, Farzam Ehsani. Farzam, thanks so much for joining us today. Doesn't this just feel like deja vu? I mean, the last time we had a sell-off like this was in March 2020 when traders were assessing risks, those COVID-19 risks.
That's right. It does seem like March 2020 deja vu. We are remaining very volatile. Within the first 8 hours of Monday, early morning Monday, South African time, the price of Bitcoin was down 15%. The price of Ethereum, the second largest cryptocurrency, was down 20%. As you mentioned, they've both made a comeback now. So they're both up in the last few hours, about 10% respectively each. So there's been a tremendous amount of volatility, obviously on the back of a few things. Number one, issues with the global economy, with Japan's interest rate going up, the Nikkei going down, obviously, concerns about growth in the United States with the July jobs report that's come out, and then obviously geopolitical tensions as well between Iran and Israel. And the cryptocurrency market is still a much smaller market than FX markets or equities markets around the world. And therefore, the sentiment really affects the cryptocurrency markets a tremendous amount, with volatility being extreme. It has been like that for some time. I expect that volatility to continue into the future.
Farzam, now there's been a rhetoric about crypto being a safe haven. This has sparked debate among a number of industry players for quite some time now. But how do we make sense of it all? Because at some point we'll see crypto behaving or moving like a safe haven, and at other points we see it moving more like a riskier asset. Just take us through how we make sense of all these movements.
It's a great question. And to your point, there are some events where Bitcoin has acted like a hedge to traditional markets. But in other cases, like we've just seen in the last 48 hours, where there's been a tremendous amount of correlation. I think the narrative is that in the longer term, Bitcoin does act as a hedge. If we look over the last year, Bitcoin is up 87% against the rand, right? And there are very few assets that have performed that well. Having said that, the volatility has been just as high in other periods. At the end of 2022, we saw a huge dip of a huge amount of depreciation of the asset at that time. So generally, people are saying that over a longer time span, 1, 2, 3, 4 years, is the type of time span that people are looking for Bitcoin and cryptocurrencies to hold their value. But in the shorter time span, there's a tremendous amount of volatility. I think the narrative of whether it will still be a safe haven in the future akin to US treasuries or gold, it sometimes behaves like that, not always. I think we'll have to see which narrative is correct. There are many people that are saying this will definitely be that in the future. Others are saying this is not that at all right now. And I think we're still finding that debate in the financial markets around the world. And I think that will only be established over the next few years.
So we can safely say that over the longer term period that Bitcoin or cryptocurrencies at large can be used as a hedge against global market uncertainty.
A lot of people are saying that. I don't want to misrepresent the fact that there's a lot of volatility. And as I said, we're looking at a crypto asset class that is only 15 years old. So in human terms, right in the middle of its teenage years. And what we see with that is a lot of tumultuousness, right? So I think what we've seen is it's gone from zero to an asset class that's worth, even with this drop, this recent drop, over $2 trillion US. And so it's an asset class that's still in infancy. And I think people don't quite appreciate that. And because it's in its infancy, we have people that are saying Bitcoin, for example, is worth zero. And these are very well-educated financial traders. And you have people that are calling for a Bitcoin price of 700,000 US dollars to $1 million US over the next decade. And so you have these tensions that play in the market that result in this volatility. My personal view is that this is an asset class that is completely revolutionary from the perspective that individuals can hold their own digital assets without trusting an intermediary institution. That particular aspect of being able to be transferred, value to be transferred across the internet at low cost and low speed or high speed and low latency, I think is something that the world will still see how it benefits humanity.
Let's talk about the risks that are still at play. You did mention, geopolitical risks still at play as well. I want us to just talk about the U.S. Elections that are coming up and just how much of a risk that could be to prices within the industry, especially if Democrats win, considering that there's also a tug of war taking place on that front when it comes to crypto and policy. We also have Republicans positive on crypto, with Trump telling a crowd at a convention to never sell their Bitcoin. It's just so much happening at the moment.
It's quite remarkable, 15 years in for Bitcoin and cryptocurrencies to be a topic of debate on a presidential ticket in the United States of America. So I think that in itself says something about how far the asset class has come. As you mentioned, just about a week ago, Trump gave a talk at a Bitcoin 2024 conference in which he was actually calling for the United States government to hold onto its reserve of Bitcoin and to hold and to create a stockpile of crypto assets, particularly Bitcoin, for the United States government. Just before that, you had RFK Jr., another presidential candidate, who was not only talking about holding the assets or the reserves that the US government has, but actually buying up 1% of the supply of Bitcoin for the United States government. And with both of their rhetorics, it was the fact that if we don't do it, China will, or some other world power will, and we don't want to lose that opportunity to be ahead of the game when it comes to the crypto asset class. So I think that is something that is very notable. And to your point about the Democrats, historically, with Gary Gensler at the helm of the SEC in the United States, there has been quite a lot of anti-crypto sentiment within the United States that has also filtered in certain parts of the world, not everywhere. And I think the Democrats right now are realizing what a strong lobby group the crypto industry is in the United States. And so Kamala Harris and the Democrats are now also engaging with the top people within the crypto industry to actually discuss how they can have a more favorable stance towards crypto. So I think either way, we're seeing a change in narrative with the US elections from a very anti-stance to one that's much more accommodating, and not just accommodating, but in certain realms, as we've just talked about, if Trump gets elected potentially, we may be looking at Bitcoin being a stockpile or reserve asset for the United States government.
Farzam, thanks so much for joining us and just sharing further insight on what's playing out in the crypto market. That was co-founder and CEO at Velar.com, Farzam Ehsani.